Hello and welcome to the weekend edition of News Now. I am Kanishka Sarkar. Well, in the latest from the IndusInd Bank saga, RBI has directed the board and management to complete remedial actions in Q4. Additionally, the RBI also assured depositors about the financial health of the bank. My colleague Ankur Mishra is joining in on the phone line with more details on what the regulator had to say to depositors about the beleaguered bank.
Yes, Reserve Bank of India has urged depositors actually not to react on speculative reports and assure the financial stability. The Reserve Bank of India has clearly said they are monitoring the bank's financial health, and IndusInd Bank is well capitalized with a satisfactory financial position. The bank's capital adequacy ratio is standing at 16.46% as on December 2024. Similarly, the PCR is also at 70% and liquidity coverage ratio is also there at 113%. All Reserve Bank is trying to pacify the situation. It has said that bank's board and management will complete the remedial actions in Q4, meaning in this quarter itself, so that whatever action needs to be taken is completed, and bank has already engaged an external audit team for comprehensive review. To discuss this in detail, we have with us Tamal Bandopadhyay. Tamal, welcome to ET Now. My first question to you will be, do you think Reserve Bank of India has stepped in a bit late?
Well, Ankur, actually, yes, I would not say that Reserve Bank of India stepped in a bit late, but the question which I'm looking for an answer to is this: if indeed RBI was aware of what was happening, and if I'm sure it was, then why did it go for yet another year extension to this particular person who has been heading the show? If you see, look at this, last time the board had approved a 3-year extension and RBI had given it 2 years. That was pretty clear that RBI was not happy, things need to improve. But then second time it came again, and RBI, instead of saying no, it had given yet another year. So why did it do so? Why couldn't it actually convince the board? I mean, instead of saying no straight away, that would have disrupted the market. It could have convinced the board that, look, this is not done. You guys look for another person. You withdraw or whatever needs to be done from the background, it could have been done. In the past, we have seen, I'll not give a name of the banker. It's a very large bank where RBI was uncomfortable, distinctly uncomfortable with the CEO. And RBI did say that we would not give it. And then the CEO, the person resigned after 7 months. Instead of 3 years, that person continued just for 7 months, and officially that person resigned. And yet another example, it's a very different context. Another private bank, old bank, where the CEO was given first time, meaning on a previous occasion 2-year term, and then RBI repeated with a 3-year term. So essentially that story says that RBI probably was not comfortable with certain things in that particular bank. Let me repeat, this is a completely different context. And then it was happy and gave it 3 years yet again. But here you are staggering it first for 2 years and then for 1 year. Why is this so? You could have said no. You could have convinced the, actually in the initial period itself, convinced the board that, look, you use this 2 years to look for a successor because we are not happy with it. So I'm a little intrigued. I'm not saying that RBI stepped up late or RBI was sleeping. It did not, he was not aware of it. Definitely the regulator was aware of it. But the key question is this: if indeed that's the problem, because the problem had not cropped up just now. It had been, if you see, I mean, we can discuss later if you want to. There were pretty evident under certain signs. So why was the CEO given yet another year? That's the key question I'm asking.
Right, definitely. Now, as you were also mentioning, Reserve Bank of India was informed in this month itself, if you believe the management commentary. Do you think the inspections which were done by Reserve Bank of India, which would have been completed, why this problem did not come out earlier? That is also something which all investors and stakeholders are asking.
Yeah, Ankur, I think there was a market was sensing there is certain things are wrong. And if you see a very senior executive also quit citing personal reasons in January. So things were actually if you ask me, those who are aware of it, I mean, they had apprehension that things are not exactly the way it should be going. With this particular bank, things are not exactly, I would say there are things which the bank was hiding. That was pretty clear. And was RBI aware of this, or did RBI inspection fail? So RBI has a very different way of looking things, or doing things rather. From an outsider, we can say that yes, RBI was not aggressive enough in nipping the problem in the bud. But we don't know what exactly happened behind the scenes, so we need to wait. Often we have seen that we were under the presumption that Reserve Bank of India was doing nothing, but Reserve Bank of India was pretty active. In fact, many stories, banking stories that has happened even in recent past, we are not aware of it, but RBI has dealt it with very deftly, and nothing happened to the particular institution, to the particular bank. But in this case, it's a reasonably large bank. It's a listed bank, so things have gone a little bit of the way it should not have gone. I would say it could have been handled little different way. Um, that's my presumption. But having said that, you yourself said there is not, as far as the depositors are concerned, there is nothing to worry about. It's not such a big fraud, stock scam, whatever you call it, which will destabilize the bank, forget the entire banking system. So depositors' money is pretty safe because on every parameter, the bank is well capitalized, bank is liquidity ratio is pretty good. So nothing to be worried about. Is the investors that to be worried about, but that's not RBI's concern. I mean, you need to check it out before you put in money as an investor. As far as depositors are concerned, banking system is concerned, and this particular bank is concerned, which are very reassuring that RBI has said that, and I think that's the right thing it has done. It doesn't happen very often. I don't want to burden with history, but there had been occasions, rare though, when RBI came out with such statements. It's one of them. It's fine, but it's very reassuring.
One last question before I let you go. What do you think will be the way forward here, having experience of covering the banking sector for so long? Do you think this is more of a process-driven problem and that will be rectified?
Well, no. If you see, there are telltale signs that senior executives leaving the organization, citing personal reasons. And also, I have not cross-checked, but the kind of data that shows how some of the senior executives have sold their stocks at the right time to get out and all. So all these things are showing, though it's not a process-driven thing. It's something probably has happened which should not have happened. It's going beyond the process. Now, what were the internal auditors doing? What were the statutory auditors doing? What was the RBI inspections doing? Did RBI inspection actually catch this, or internally it was done? All these things will be unraveled. We are not aware of this, but certainly I don't think it's just a question of process. It's little more to it.
All right. Thank you so much, Tamal, for joining at this hour. But for now, Reserve Bank of India has definitely stepped in to reassure the depositors that your money is safe. Over to you, Kanishka.
Thank you for those updates, Ankur.